Welcome to the Real Vision Daily Briefing. It's Tuesday, February 22nd, 2022. I'm Ash Bennington, joined today by Real Vision's own Weston Nakamura. Tony Greer is on vacation and will be back tomorrow. The top story today, the events in Ukraine. Russian troops have entered the Donetsk and Luhansk breakaway republic in the Donbass region of eastern Ukraine bordering Russia. Today, in a news conference at the White House, U.S. President Joe Biden called the actions, quote, the beginning of a Russian invasion of Ukraine, and, quote, the flagrant violation of international law. The Biden administration has also announced sanctions on Russia and individuals, Russian banks and individuals, and stated that Russia would pay, quote, a steeper price if the events continued to unfold. Germany has declined to certify the Nord Stream 2 pipeline between Russia and Germany, effectively halting its implementation. Obviously, today is, not surprisingly, a risk-off day in U.S. equity markets. Let's run through some of the prices. Dow Jones Industrial Average, the biggest loser today of the major equity indices, off 1.42%, nearly 1.5%, closing down at 33,596. S&P 500 off 1.01%, closing out the day at 4,304. NASDAQ also off 1.23%, nearly 1.25%, closing out the day at 13,381. Energy markets rallying today. WTI, West Texas Intermediate crude, trading right now at 92.35. Brent trading at 96.36. Brent, of course, the international price of oil. WTI, the price at Cushing, Oklahoma, the U.S. price for oil. Weston, obviously a risk-off day. I know that you're looking at these markets very closely. What do you think of this price action?
Yeah, so this is a very good example of why you need to be very aware of cross-asset markets, regardless of if you are a single asset trader or investor or what have you. I tweeted about this yesterday, but you need to know essentially what is moving the markets, because at this current moment, we have obviously the Russia-Ukraine headlines, and by headlines I mean they're machine gunning out like every 16 seconds, right? At the same time, you also have, questions about whether the Fed is going to remain as hawkish as
Right.
Has been consensus, and you have, a whole bunch of other, any number of things. So it's important to know what is moving what and what is not moving what, so that you don't kind of just falsely trail off into an irrelevant direction.
Yeah. Also, obviously, important to point out, this is very much a murky type of situation. The fog of war, as the phrase goes, very much in effect here. There seemed to be some disagreement earlier today about whether the Biden administration was officially calling this an invasion. So obviously, the situation very fluid, fog of war in effect, trying to piece these things together. Weston, what are you making of the things that we can see, which are the prints that we're getting on the screen right now in commodities? I mentioned WTI and Brent at the top of the show. Also, nat gas up about 1%. This is NYMEX natural gas changing up 1% on the day, now at 448. That's dollars per mega BTU.
Yeah, sure. Actually, before we get into commodities, if I could just run through today's price action in particular, because I just have a series of charts. So, Brian, if you go to chart 0, yesterday, U.S. was closed, right? And that was a very interesting time to look at markets, because you have this major risk-off, global risk-off from Asia to Europe. We're talking, 2-3% down on indices and all that. And at the same time, you have the U.S. Indices, the futures markets, and the Treasury markets, and the Treasury futures markets just closed. So you have no you're feeling around in the dark as far as U.S. assets are concerned, right? So if you want to get a gauge of what the kind of general macro sentiment would be, you can look at things like the euro ruble cross rate, which is something that you and I had discussed last time, to see if this is something that is moving in line with European equity markets, for example. And if they are, you know that this is a risk-off move that can be attributed to specifically the Russia and Ukraine headlines, or you can match them up with like a December 2022 Euro-dollar futures contracts to see if it's related to that. But today was very interesting because so this is kind of the first chart you're seeing right here is basically month to date, and you can see like the latter half of that chart really has been a market that's been driven by these headlines coming out of Ukraine and Russia.
Weston, let's explain precisely what we're looking at here. So you have euro ruble inverse. So this is the flip rate, basically the reciprocal rate, where you're seeing that chart representing euro strength, ruble weakness, and S&P E-minis. These are the CME traded E-mini S&P 500 futures, showing obviously a decrease in the price of the S&P 500. And those things obviously very tightly correlated on your chart.
Right, and the reason I'm using the E-minis is because if I'm just using like SPX or SPY, that's only during from 9:30 a.m. to Eastern to 4 p.m. Right, but E-minis trade not round the clock, but they trade throughout Asia, they trade throughout Europe, and therefore you can match it up better with FX, which is a 23-hour market. So. And then the euro ruble, I just did it inverse because it's easier to see. And this is basically like, if that white line's going down, that's the ruble getting weaker versus the euro, and up is the opposite. So that's basically what's been kind of the trend over the last 2 weeks or so. The next chart, though, is this sort of intraday today. It's very interesting because you saw, Asia down, so Japan, Hong Kong down like 2% on the day. Europe too was getting hit pretty, E-minis were getting hit pretty hard during the European session, and it looked like even the S&P was going to open down potentially close to 2%, but it didn't. And the reason why is because if you go to the next chart, you see that kind of V rally there, right in the middle. That is the DAX index, which I just use as a proxy for just kind of European equities. And you see that from cash open.
Yeah, DAX, for those who don't know, obviously is the German stock exchange.
Yeah. And so European cash open, Europe got beaten up really bad over the last few days. Again, U.S. was closed yesterday, and then at European cash open, the indices opened down, but at cash open, from cash open forward, you saw a pretty big rally, and that lifted risk assets globally into the U.S. session. And then when the DAX or when European indices closed, you saw E-minis fall off. And all the while you see the euro ruble cross rate trading pretty much in tandem with it. So I mean, I don't know specifically why that is. It might be short covering or whatever it may be, but the price action itself, you can tie that into Europe. So this is very much a European-driven directional market at the moment.
Yeah, Weston, those correlations are very elegantly explained and encapsulated in those charts. Obviously, as we said at the top of the show, clearly fog of war type of situation, trying to figure out what's actually happening on the ground. But what we do here at Real Vision, obviously unpack capital markets, understand what's happening. And those charts show us what we can see, which are these correlations. Weston, when you look at these, how do you know which direction the causal arrow is pointing? In other words, where the causality is flowing from and to?
I'm sorry, I don't understand the question. How do I?
The direction of
how do I know? I'm not going to know where anything's going to go in any moment. But how do I make my best guess? Is what you're saying, or
how do you make your best guess, Weston, on the direction of these correlations, and how do you interpret them?
I cannot tell you even in the near term what the direction would be. But the way that I can look at that is that basically if I can identify that, let's say, the last 2 weeks of S&P downside and volatility has been due to the headlines coming out of Russia, and not at all due to any sort of FOMC rate hike or not sort of adjustments and this and that. Then, and if I believe that the Fed is just unchanged throughout this whole time. Then come March 15th or whenever the FOMC meeting is, if markets are still being priced strictly off of uh, Russia-Ukraine headlines, and they have significantly deviated from where they should be relative to where the Fed is in terms of their policy, I can position myself so that come the FOMC meeting and the press conference and all of that, and if markets kind of realign with the Fed, like, oh yes, I forgot this Fed thing, this whole Fed thing exists, then you can kind of benefit off of that divergence. So those are ways that you can do it. But like how it goes, like how the market goes from here, I can't look at that and tell you. I can't look at anything and tell you that. But if there is some sort of a discrepancy or unusual divergence in which markets are overly focused on one single factor, and there's another glaring factor like the FOMC, then those are ways that you can sort of take advantage and kind of close up that arb.
Weston, one of the things I admire most about you is how data-driven you are, and the epistemic humility you so clearly display when you don't know the answer to a question. You're just looking at what's there. This is what the tape tells us, and this is what we're showing our viewers. Talking of which, the tail of the tape, what are you seeing in U.S. energy markets and global energy markets?
Yeah, it's not just energy either. So just commodities in general. This is this chart I found that's basically I don't know how updated it is, but it's basically the number of commodities in simultaneous backwardation, and it's at a record high. And so there's something like almost 20 commodities in backwardation like simultaneously, which is pretty insane.
So
Um,
let's talk a little bit about backwardation and contango. These are the curves relative to the spot versus the future price of an asset in the futures market. This is an important point. Contango is when the spot price is lower and the futures price is higher. So you see that rolling up. Backwardation is the opposite, spot being higher than the futures price.
yeah, and so normally, typically with commodities, you're not in backwardation, right? The futures price would be higher than spot, but in this case, you're seeing spot prices that are above these like forward prices because it's people that are willing to pay a premium today for that underlying commodity. That is, like a spot price is not a financial instrument or anything like that. That it's like that's the price of like what if you need heating oil today, you're gonna pay whatever it is that it's the market is quoting.
Right.
So that or corn or whatever it may be. So that's why what's so interesting about that is that there's so many commodities right now that are in simultaneous backwardation. There's just deficits across the board. And this is not some like financial alchemy or anything like that. This is real
Right.
world demand for that, reflecting that.
Yeah. And of
Oil
course, futures are physically delivered, which again, to your point about the real world demand implications of these markets.
Right, right. So with regards to let's just take crude oil for example. So Brent was in the 99 handle today, almost hit 100. It's getting there. Now you're getting all of these like sell side, banks that are making these calls. I think Goldman has a 105 target on WTI crude, and you have like JP Morgan, whoever saying like if you get troops on the ground, then oil is 120. If this happens, SPX is that. Like I don't know how these strategists can distill like real world events into a specific price level for anything, not just for this stuff, right? And frankly, I think it's more or less nonsense. But what I can tell you is that I can tell you how that the price of crude can get to and through 100 or even 120 this year on a mechanical level via options markets. And so that's something that I can go over right now.
Yeah. What
So
does that scenario look like, Weston?
yeah. So regardless of what's happening in Ukraine, in anything like that, purely based on the mechanics of how options markets, how they work. So if you look at the crude oil options open interest table, from CME, you'll see that there are a ton of call options opened that are out of money currently at the 100 strike level. There's like a wall of 100 strike calls on WTI crude of open interest that are open, particularly for the December 2022 expiry. So I kind of have these strike prices that are these red boxes. If you look at that first one, that's the 100 strike. The columns are like the expiries, and if you look at the rightmost one, you'll see like that 66,000 sort of number. 66,000 in contracts opened for December 100 strike calls on WTI crude. That's what 60 million barrels worth of oil notional contract in that one contract. That's like a half year of like OPEC output, like in that alone. So there's an insane amount of like 100 strike calls. There are also, it's cut off here, but like there are also call options being opened on not just 105, but on 110, on 120, and 125 that are being opened as well. And so, again, regardless of what the actual headlines of the are or whatever they may be, just mechanically, because of the fact that there's so much options open interest, you get that same sort of dealer gamma hedging effect, in which dealers, the sell side banks that are taking the other side of the options position, so they are short call options. They have to, by law, they have to always have a what's called delta neutral book. They have to have a directionally flat book. They can't take any directional position, and so they constantly have to hedge. And so if they're short a call, and they have downside exposure, they have to buy futures in order to remain delta neutral. And that buying of the futures in and of itself, that hedging activity, pushes up that price and brings it into the money. And so you can see a scenario where crude just goes up to and through 100, and should it do that, it can easily get up to that 120 strike very quickly, just because of this sort of gamma squeeze. It's sort of the same mechanics as GME, from exactly like a year ago or so. And this is a scenario that is very possible. And so that's why I can say, like, not based on headlines from this or that, but mechanically, these are specific levels that you need to watch, and you need to watch things like open interest and all that, and changes in open interest, and positioning from the dealer side or the market maker side, and how they're sort of, what their activity is like.
Yeah, obviously, this is a case of where you have to watch the derivatives market to understand what's going on in spot, and very well explained there. Weston, I wanted to take a look at a clip here on Real Vision today. This is a clip. This is Mike Green talking to Alex Gurevich about oil. It's very relevant to what you were just talking about. Let's take a look at that.
In May of 2020, I put out a tweet as everyone was talking about, oil prices negative. I'm like, guys, this is inflationary. Right? Like everyone's so focused on the deflationary aspect of oil crashing to negative $37. That means it only has one direction to go, right? It can only go up from here, and that's going to play through directly. And, the dynamics of the market structure, particularly in things, and again, this is just an experience base, right? If you had looked at the dynamics of the super contango that existed in May of 2020, spot oil is negative 37, 1 year out is somewhere in the mid 30s or 40s, right? So, you're literally talking about an $80 swing in oil prices that was already built into the market at that point. Now, if you look at the forward curves in oil, they don't reflect anything that looks remotely like that. Actually, what we see is, the concern of shortages developing on a short-term basis, but on a longer-term basis, exactly to your point, like the markets are just not that worried about it.
Really interesting conversation with Mike Green, talking about the super contango event, oil going negative, and the effective aspect of this being a rebound where inflation necessarily must come from the oil sector because of the fact that prices only had one direction to go. Weston, you and I were talking a little bit during the break about China. Obviously, geopolitical stories, sometimes like what's happening in Ukraine, tend to crowd out other areas of the geopolitical spectrum. Tell us, what is going on in China right now, and why do you think it's significant?
Well, the significance is the fact that it's China, but what I will say is, so I think it was either the last time I was on with you or when I did a kind of one of those like RVDB like updates, and I said that there was you're gonna have a quiet period from out of China during the Olympics because China wants to and will have a very headline quiet, smooth running Olympics. But I also said that watch out for the closing ceremony of the Beijing 2022 Olympics because that is going to be a catalyst for a release valve of geopolitical risk to just explode onto markets and into society. And well, here we are. So,
so when you say the closing ceremonies, you're talking about effectively not a statement at the closing ceremonies, but the fact that the Olympics are ending and therefore a new regime shift in geopolitics.
I mean that Vladimir Putin went to the Beijing Olympics opening ceremony and met with Xi Jinping in person, just to discuss who knows what. Things were very quiet during that time period because they both kind of put their respective whatever on pause. I'm sure that Xi Jinping was like, "Look, do not mess up my Olympics by invading. Like, don't do your invasion in the middle of this. Like, wait till afterwards." Or it was Putin saying, "Okay, I'll be patient and wait till afterwards to whatever." But that's a time where everyone just kind of played nice. Put politics aside. Let's just do some curling and so on and so forth. And now that that's over, you have all of this pent up stuff that's now coming to fore. It's not. This is not a coincidence of timing or anything like that. I actually had a position for this very specific catalyst. So this is why I said that you have to look for sort of what's not in headlines is just as important as what is. And so currently, what is in headlines obviously is just this this Ukraine-Russia story. What is not in headlines, though, that is happening sort of quote-unquote under the radar. So China is once again cracking down on their tech sector. And so you saw the Hang Seng take a beating today. The Hang Seng tech sector, especially, like names like Alibaba, Meituan. This one was Meituan is a kind of like an Uber Eats sort of DoorDash company. They specifically said they didn't call out Meituan by name, but they said delivery companies need to lower their prices, and so they're getting hit by double digits. Their stock is. So this is still ongoing in China. The people who thought that they're easing up on the crackdown, they're not. And this is being snuck in right under the radar of Vladimir Putin doing his whatever it is that he's doing right now. And Xi Jinping knew. So these are things that what you have to pay attention to what's obviously in the news, but you also have to pay attention to what's not, what's purposely being released, knowing that there are eyes everywhere else except for there.
Very interesting. Weston, I know this is an entire show that we could have this discussion on, but I want to get to some of our user questions because we have some good ones coming in. Doug E., this comes to us from The Exchange, Real Vision's internal social media network. And Doug E.'s question is, why are almost all oil stocks going down while oil is up? I'm looking at BP right now, off almost 2.25% on the day, 31.06. ExxonMobil, XOM, also off over 1% on the day, trading right now in the aftermarket at 76.57. Weston, to Doug's question, why are oil stocks going down as oil prices rise?
So the answer is I don't know because I haven't looked at the oil stocks. If you're talking about intraday today, I don't know. I'm pretty sure that when I looked at the open though, energy stocks for both in cash at cash open for Europe and in the U.S. were strong from what I recall. But if they're closing down today, it might just be because oil had a midday peak and had pulled back since then. And so so basically, if crude falls, if the underlying commodity falls, oil stocks are going to get crushed. So this is not a sector that anybody is overweight by any means, or even equal weight. They are just begrudgingly getting into this the energy sector because it's the only thing that's working in all of SPX. But they're happy to dump out of it. So the second that you see the underlying commodity sort of dip, I'm sure that that's just a function of that. If you're talking intraday again, but I don't know. So because I haven't looked at that specific market today. So
Weston, obviously a busy day here that we're watching. We've got about 60 seconds left. Final thoughts, key takeaways.
Key takeaways are to make sure that you are as familiar as possible and have a good grasp on cross asset markets, that you know which currencies to look at, you know which commodities to look at, and you know which interest rates, products and futures and whatnot to look at. And the reason is because you need to know what is moving what and what is not moving what, and so that you can follow markets and ascribe market movements to the proper story, and so that you don't get led astray.
Yeah, insightful as always, and very well said. Weston, thank you so much for joining us today.
Thank you.
And thanks for watching the Real Vision Daily Briefing. Since you're a Real Vision viewer, you might want to work with us at Real Vision. We are hiring. Check out realvision.com/careers. That's realvision.com/careers. Weston, you started as a Real Vision viewer, and now you're a Real Vision fan favorite here on the show.
Half of that sentence is true. The fan favorite part is not. But yeah, I did. I started off, actually, it's funny because I started off on the exchange and I made a video about geopolitical risk, which I'm going to put out later this week, a totally different one, trading geopolitical risk. But that caught Raul's attention. This is when Trump caught COVID, and I made a video about how to trade that specific thing. And so, yeah, and then, I mean, it's been incredible. So join us.
So perfect, right? It's full circle from where you started to where we are today doing this show.
Indeed, it is.
Yeah. So from social media producers to designers and developers, it's all at realvision.com/careers. Thanks for watching, everyone. We'll see you again tomorrow when Alfonso Peccatiello hosts Darius Dale. Tony Greer will be back from vacation next week. Thanks for watching, everyone.